Alrighty, folks, we are going to continue with the trend of steel manning a topic. Today's topic is today a great time to buy real estate or a horrible time to buy real estate. We're going to have this conversation with the one and only the lumberjack landlord, somebody who's been in the game 20 plus years like myself. We have seen a lot. Wow. Episode number 1 will be, it is a horrible time to buy. You're an idiot. You're a moron. Don't do it. Video number 2, which will come out 24 hours later, will be, it is a genius or great time to buy. Matt, welcome to the show. Let's stay on task. Let's talk about why it is stupid, moronic to buy real estate today. What do you got first off?
I mean, all the information that's in the market about its uncertainty, that would make me stop buying real estate. If I'm just watching the news and I'm just watching idiots like us on YouTube, there are a lot more people that are talking about calamity, crash, do not buy. Here's all the warning signs. Here's all the data. So yeah, I think that a combination of, if you're watching, when you're watching headlines, if you're following those headlines, you're an idiot to buy real estate based on uncertainty in the market and the fact that there is going to be a crash.
Yeah. The thing that I think about on this discussion is, if you look at what happened under Smoot-Hawley, which, was a cause or an extension of the Great Depression, I don't think you can't look at the tariff situation that we are going on now and at least at some level say that's a possibility.
Of course.
So if you were standing in front of something where one of the outcomes is a Great Depression 2.0, your job, frankly, is to keep as much cash as possible. And even if you're an owner-occ, you're still putting 3.5, 5. You're an investor, you're putting 25% down now. So why drain liquidity in an environment that has a non-zero chance of a Great Depression? So that's one of the things that I think about.
Yeah, and I think that that's right. The idea is pricing in a correction. And right now it's not priced in yet. Everything's still flying off the market. Everything's still setting records. Yeah. Everything still sells pretty quickly. And so there's no discount to putting the capital at risk, because like you said, it's not a zero chance for a depression. It's not.
Right.
Now, depression as defined is 12 quarters, 12 quarters of negative GDP growth. And I think that 99% of the public doesn't understand that. 12 quarters of negative. So is that a possibility? It's not. I 100% agree with you. It's not zero.
Right.
And so if you're not getting any return on your risk, then why are you risking?
Yeah. Yeah. The other thing that we're seeing in the markets today is the negative wealth effect. I talked with Beth Traverso yesterday. I think the video comes out today. Her market is basically crickets. The only thing moving now is entry-level housing. All of the stuff at or above the median is sitting longer and longer and longer. And really, that is, again, the wealthy, the K-shaped recovery, bifurcated, whatever you want to call it, the consumers kind of pulling back. And if that's true, that was the last bastion of growth. We did get the Q1 GDP print this morning. It was also negative, right? Negative 0.3%. So, we also have the Fed now pricing in, or not the Fed watch tool pricing in 4 rate cuts all of a sudden. Where the hell did that come from? Exactly. The economy certainly seems to be on a slippery slope with at least a recession. I agree with you. A depression is non-zero, but it's not large either. Agreed. A recession is certainly double digits, and I would argue for some people is a base case.
I agree. I think we are going to see a recession. We've been talking about it. It's going to happen later than what I thought, but it's still going to happen. Does that mean crash and pandemonium and our lives are over? It could for some. It could for some, right?
I would argue it will for some.
It will absolutely for some. It could for more than some, but it's happening now. Equity partners are getting taken out on these larger deals. Yes. It's happening all over the place. Thankfully, we told people that was going to happen. Yep. We told them to expect that adjustment. But yeah, there's a lot of signs that point to it is a horrible time to get into real estate, just like it was when COVID was beginning. It's just like that. It's just, history doesn't repeat itself, but it does rhyme. And that's the rhyme. Right. The rhyme is that there's some very large external event that we don't have a ton of control over, because we can't control how 170 countries are going to respond to, hey, we want a better deal. So yeah, there's a lot of uncertainty in the marketplace, and that's a pretty big reason to not invest in real estate.
Yeah, the other thing I think about not buying today is there's a lot of stress in the mortgage market. I don't know if you've been following this. I follow him on X. His name's Pulte. I think he is the chairman or whatever of FHA, housing. I think it's Housing and Urban Development, HUD, one of those things. But he's been basically putting out some tweets here recently talking about all the mortgage fraud that is occurring with FHA and Fannie and Freddie loans. And, those that's going to cause pain, right? There's a lot of people that have been getting extended and pretend, and that party's over. I think there's been a lot of FHA stuff that should have gone to foreclosure that was delayed years. And, Pulte sounds like he's going to clean that up, and that's going to force a lot of inventory. Why was the Great Recession so bad for real estate? Is inventory just kept coming. And also demand evaporated, right? So we run into a cycle where inventory via distress and foreclosures ramp and demand pulls back at the same time. That very quickly can get out of hand, like we saw in 0809.
Yeah, I mean, I think, it was different markets and different speed in those markets, So if you look at it nationally, that's where I think a lot of people do viewers a disservice, is that they talk about this massive number and they talk about it nationally. The fact of the matter is that the worst year was only down 8.9% nationally. Right. The problem is that in some areas it was Fresno and it was 75% in a year. Yeah. Right. And in other areas, in other like less affected areas, it was zero. Yeah. There were a lot of areas that were 0 or minus 10%. And then it just, depending on where you were, was how bad it got.
Yeah. Yeah, the other thing that's going on, again, being a negative on housing, is the trend is very clear, right? When you look at the 200 largest metros, the numbers of metros going negative has only been increasing month on month. I think currently, shout out Resi Club, I think it's 40% now showed a negative month on month. Also, one of the things I think about is a lot of the upside we had was from pandemic, people moving locations. Yes. And that is starting to reverse. You even had Uber the other day going, get your ass back in the office 3 days a week or else, which again, when you think about a tech company in San Francisco mandating that, that's like, oh, this is real. I don't know if you saw it, but it looks like Austin, Texas might be down 20% year on year. And, again, talking to Beth Traverso, that it's slow there. It's probably slow in the Bay Area. Again, the negative wealth effect, pandemic, boomerang. There's a lot of inflated markets that might see some significant negative prints.
Yep, I agree. I mean, I think that, I've talked about it, you've talked about it as well. I just had the timing wrong, I think. Right. I mean, we'll see, but I believe that we're in for a 10 to 20% correction. And I think that certainly there's going to be markets that exceed that, and so that's going to give, the YouTube guys a lot to talk about for those specific markets. They just have to be clean and talk about it and isolate it to only those markets that's occurring in. And what's really interesting is that in the Austin market, largely speaking, the reason that occurred is because there's no one that built more in the last 5 to 7 years or 10 years. So what's actually working is supply and demand. It's the market. It's actually working. But that's a negative thing when, again, if we were investors in Austin, I know both of us you looked at Austin too, right? Like,
absolutely. Yeah. I looked at 08, 09. Yeah.
Yeah. Yep. I looked heavy at Austin. And the issue that there was that their property taxes are really high because they don't have that state income tax. So that offsets things, and that's just passed on to a renter. So I think that it's another sign that the market, certainly is difficult.
Yeah. The other thing I think about today is just math and the numbers. Like Graham Stephan would validate this. It's just cheaper to rent in most of the country than own. So why own? It's a better deal to rent, take the margin, invest it, do whatever you want. This too shall pass, as they would say. It's just a bad, in most of the country, this is not true everywhere, but a lot of the country and certainly the major metros, it's just flat out cheaper to rent. So why buy?
Mm-hmm. Yeah, there's that. There's the fact that 70% of people live paycheck to paycheck and they don't know how to get, they don't know how to work with a mortgage company or with a seller and actually get their 3.5% baked in. There are all the idiots who buy for appreciation. Well, good job, idiot. Enjoy.
Yeah.
Just like I told you in 2023, I'm going to own your house. I'm going to own your house. I'm going to own it because you decided to buy for something that's not a way that anybody can run their business, but the government, because they can print.
Yeah.
So
the other thing, the other thing I think about the real estate market is this is just a trend coming in, going out. We had a lot of people jump on Airbnb and all these other hot trends because they thought it was money making things.
Sure.
You and I were called the old fuddy duddies, and we were called boomers because we didn't do it. And that's now reversing in a big way. Certainly, again, not like all markets, but there's plenty of markets that were overinflated and are due for their comeuppance as that short-term rental market implodes.
There's always going to be an adjustment. Usually the timing was 7 to 10 years. This one's 14, so it's overdue. Usually when something is overdue, it's worse, right? And so largely speaking, that's why I believe this one's going to be worse than the normal one. And you have a lot of different aspects. It's not just one. And so anybody that jumps on a stage and says it's this one issue, it's all of the issues combined. That's what it always is. It's death by 1,000 cuts. It's going to be Airbnb is a problem. It's going to be massive raise in taxes for the states that don't have income taxes. That's a problem. It's going to be the syndications that blow up. It's going to be, there's a long list of a dozen things that are going to hurt investors.
No, couldn't agree more. When you think about, again, this being a stupid time to buy, any other things jump out at you that just say, don't buy, don't buy, don't buy?
I think that it's the combination. It's not just rates. It's not just deposits. It's not just the spread is what we call it. The difference between what the bank can borrow money for and what they then lend it out for. In COVID, the spread was 150 basis points. Now it's closer to 275 or even 300. And some banks that I believe it's the clearest indication that they're in trouble, they're at 3.25. That's a massive spread. That means that they're borrowing at, let's say, 4%, but they're putting it out on the street at 7.25. Yeah, that's a massive spread. So I think all of those things, I think it's a combination of those things, which is largely what makes any deal a bad deal to almost any deal a bad deal to buy.
Yeah. Folks, at the end of the day, this was a discussion about being a horrible time to buy. We will, in 24 hours, release the opposite of that, talk about why it's a great time to buy. But before we do that, Matt, where can they find you?
Lumberjack Landlord, YouTube, 9 p.m. Eastern time on Thursdays. Do a 90-minute show where all I do is just answer people's questions.
Thank you, buddy. We appreciate you.
Anytime. Thanks, Mike.
Mm-hmm.